Hey everyone, this is Dan with Theta Trend. Today is Wednesday, January 20th, 2016. It's about 2:30 p.m. here. The market closes at 2 p.m. Mountain Time, so it's been closed for about a half hour or so. What we're going to do today is we're going to talk a little bit about the CIB that was entered yesterday. Today we had a big push lower in the Russell 2000. As you can see here, the red opened down, and then it pushed way lower down here to about 958 or so before catching a really strong bid and moving all the way up here, I think to about 1008 or so, something like that, and then sold off a little bit towards the close. But what happened is we were in this butterfly yesterday, and so the green lines show the expiration break-evens, and what you can see is price traded down here. We hit the downside roll point. And so I tweeted out, I said that I was going to close the position and I was going to wait a day and see what happened because we've just been, kind of tumbling lower and tumbling lower without a lot of upward movement at all. This is only the second green candle we've seen this year, incidentally. Well, maybe that one's a green one, I'm not sure. But at any rate, what I did is I took off the position and I was sitting around and I was watching the market all day, and we had this really, really strong rally come in kind of halfway through the day. And since we got back up into this higher part of the range, I decided to reopen the trade, and we'll take a look at that position. And the blue lines here represent the new expiration break-evens for the rolled down position. I didn't want to roll the position all the way lower early in the day when we were down in here, because then our break-evens would have been really quite a bit lower. We'd already be adjusting on the upside probably. It's not a bad idea at times just to take the position off and wait a day and see how things play out. We've been moving quite a bit in here, so there's no harm in sitting overnight before putting risk back on. But with the move higher, I decided to go ahead and redeploy the trade. So, and again, this is the daily chart. We're going to drop down here. This is the 65-minute time frame, and again, we're looking at the 5-day and the 10-day simple moving averages. One of the things to point out is the Russell keeps getting up to this 5-day moving average, and it finds resistance either at the moving average or it finds it before that, and it tends to sell off. And today was no different. We had this breakdown, came down here to about 958 or so, and from there just staged this huge rally up to 1008. And I did the math on it. It's about a 5.2% move from the low to the high intraday, and so that's that's pretty significant intraday movement. There's a lot of volatility right now, but the position we're in it's fine, it's safe, and I'm not too concerned about anything at this point. So let's hop over and just look at the trade. So if you recall, yesterday I got involved and I bought the 950, 1000, which is about right there, 1050 butterfly, and I think the 104 IWM call. So what ended up happening today is with that move down, I closed out the position when the Russell was around 965, 968, somewhere in there, which was the downside roll point. And rather than reopen at 960 or 970 or something like that, I decided just to sit it out a little bit and wait. And we got the big move up higher, and I think when the Russell was around 990, I opened up the 980 butterfly. So what we have here is a butterfly it's actually not 50 points wide anymore. I've gone out to 55 points. So you can see this is about the 925, the 980, and then the 1035. And so the reason is just that there's so much volatility that these butterflies are really, really cheap right now. So if we think about it, the one-day standard deviation has increased pretty significantly with the increase in volatility. And we can get, a pretty favorable risk-reward profile by going to a slightly wider butterfly. I probably could even have gone to 60 points wide, the 920, the 1040, but I decided to stay at 55 just because it should be a little bit easier to handle, I think. And so that's what we're in right now. If we drop back over here to the monitor tab, we can see the fills. So that 55 point wide butterfly got filled at 1060, and the risk reward on that works out to about 23% or so, which is still pretty good. But at any rate, that's a picture of the position today as of the close. We'll see what happens. The upside adjustment point on it here has moved down to about 1025. On the downside, we have, it looks like, to about 940-ish or so. So we have a little bit of room to move here. We'll see what the market does. It's things are moving really fast. So if you're sitting it out, there's certainly no harm in that. But we'll see how the trade plays out and take it a day at a time. Thanks for watching.